Hi everyone, I'm Tom Seaman, the editor-in-chief and owner of Undercurrent News. Welcome to the first installment of a free weekly video series on global seafood prices we're calling the Market Current. As the name suggests, we'll be using these videos to discuss interesting movements in global seafood prices, underpinned by the over 3,700 datasets on our prices portal. The data we'll focus on today is Farmgate, CFR, and wholesale shrimp prices, all of which are contained on our new global shrimp tracker tool. We'll start off with a discussion of US wholesale pricing with Gary Morrison, one of our price reporting team and head of strategy, who is based in Toms River, New Jersey. Then we'll move to look at China wholesale prices for Ecuador shrimp, then the CFR offer levels from Ecuador to China with Louis Harkell, our head of global prices and data based here in London. Louis will then take us through the latest dynamics in Farmgate pricing from Ecuador and China. Then Dan Gibson, our deputy editor of EMEA, will then cover Indian Farmgate pricing, having just got back to London from the India International Seafood Show in New Delhi. Dan will also cover the feedback from that show from Indian exporters who've been hit with 50% additional tariffs in the US, their main market. Finally, Dan will run through Farmgate developments in Indonesia, Vietnam, and Thailand. So, Gary, can you kick things off by taking us through the latest in the US wholesale market, where obviously prices have been driven up by tariffs and other factors? How have you seen the pricing of Asian and Latin shrimp play out?
Thanks, Tom. Thanks, everyone. It's certainly a crucial time now for having all this information at your fingertips. It's really volatile, and when volatility sets into the market, it's really important that you have the most efficient and accurate data to make good decisions. So, yeah, Tom, I'll talk about the U.S. wholesale market for shrimp here right now. And as you can see, I'm on the Undercurrent News homepage, and under pricing, we're going to go to the U.S. wholesale market, and that's going to bring you up all of our species. But specifically, the first one that pops up is our shrimp data tables. And again, the whole site works pretty similar. It's interactive, and you can find more granular data as we work through it. So, we'll talk here what the impact of tariffs and some of the higher cost structures on shrimp around the globe is doing to impact U.S. pricing. When the reciprocal tariffs were announced April 2nd, I think people felt like shrimp was going to shoot up, and it took a little while to do it, but it's doing it now. What happened was the inventory here in the U.S. Was front loaded, so we saw imports for the first half of the year through June be at record levels. And that put a little bit of a temper on people's expectations on prices. But it's not only having shrimp here in the U.S., it's having the right forms and the right sizes. And once that started to filter through the industry, I think that's when the reality of higher costs really set in. Now, if we look at some of the shrimp table, we have white shrimp from Latin America and Asian origin sources, as well as black tiger shrimp, and then wild caught shrimp from Mexico and Argentina. But we're really going to focus on the farm raised imported shrimp here. Now, as you know, some of the Asian source nations were hit with higher reciprocal tariffs than Ecuador. That would have thought that Ecuador had a clear advantage, right? In terms of pricing, because they did not have to add those additional costs on their source shrimp coming into the U.S. Now, Latin America had a little bit of an issue. They have a capacity problem, so they're at full capacity for the shrimp that the U.S. consumer wants. Now, remember, we talked about how you want the right forms and the right sizes here in the U.S. when you're importing shrimp, and the U.S. consumer really craves convenience. So you're talking you're peeled, you're cooked and breaded. And it was really the headless shell on and the head on shell on that was traditionally commodity traded. But we needed to have more peeled shrimp here. And Latin American producers just couldn't produce much more. So the Asian partner nations really had to, remain partners with U.S. importers. Now, since that cheap inventory has moved out of the United States, higher costs have now passed through onto the wholesale level. As you can see, we're going to look at the bellwether 1620 peeled and deveined tail on from Latin America. Now, what these Latin American producers did, now you would think that they had that advantage again in cost, but they pushed their pricing straight to the tariff ceiling of their Asian competitors. So there was really no advantage. They didn't think that they should be discounted at all. They didn't have the capacity. People were fighting for shrimp. So they moved their prices up. And as you can see, from April 2nd, reciprocal tariff time, on week 15 of 2025, prices are up about 15% in that time. Now, one of the great features about the site is you can compare any product you want. Now, I want to show you what we were just talking about when it comes to peeled and deveined shrimp competitor, where you can origin shop, right, from Asia, the 1620, the exact same shrimp. If you're looking from some of your Asian partners, look what happened in the U.S. wholesale market. Prices are nearly on parity. Typically, prior to the reciprocal tariffs, Asian P&D tail on traded at a slight premium to their Latin counterparts, but all of a sudden, Ecuadorian producers pushed prices up straight to what their Asian competitors are doing. They didn't want to give an inch. They didn't feel that they needed to price them any cheaper, as they know that the U.S. consumer wants it, and they were at capacity. There wasn't much more that they can produce in this immediate time frame. So, Tom, if you look at some of these bellwethers, prices are up. The higher cost structures are working through their way through the supply chain, and U.S. Importers are moving prices up in response to the higher costs. And so if you look at some of the other types and forms where importers can't origin shop, you're talking your Asian easy peel, cooked and breaded, as well as black tiger shrimp, those prices have risen even faster. Easy peel shrimp is something that the U.S. consumer is demanding, and there's a lot of interest, but there's only one specific area that we source most of our product from, and that's Asia, right? And within Asia, Indonesia is one of the largest suppliers of easy peel shrimp, and we know that there was some issues recently with imports from Indonesia, not only tariffs, but some FDA regulations, and that really tightened the grip on supply. So it's not only tariffs that are adding to cost structures, but limiting factors such as supply are also driving prices up. Now, if we look at a price chart of an easy peel shrimp, you can certainly see that prices were up when we hit reciprocal tariffs here in week 15, but they have really skyrocketed since some of the supply challenges that we have seen here in the U.S. So, as buyers are looking for easy peel shrimp, they really have to bid up product in order to secure it. And that's similar for black tiger as well, because black tiger shrimp, if you click on a side chart, you can kind of see that it brings it right there. Black tiger replacement has been an ongoing challenge throughout 2025. So supplies were limited as it was. And now that that's even crimped a little bit more and higher costs are in there, they're also moving higher significantly faster in the latter part of the year here. So again, pretty much a stable market until higher tariffs have worked their way through the system, and then supply shocks are even further burdened and prices are bid up just a similar way as they are easy peel. And if you look at some of the cooked shrimp, it would be a similar story. And then if you look at overall Latin shrimp as well, the other thing that we're missing here in the U.S. When we were front loading all those supplies early part of the year, was that they had to harvest shrimp early in Latin America to get them onto containers to get them here to the U.S. before tariffs hit place. So larger shrimp, specifically larger Latin American shrimp, have also had a higher delta than some of the other sizes, because there was not time to grow to that full size that the U.S. consumer prefers in larger shrimp here. So it's not only tariffs, but higher shipping costs, higher storage costs, higher interest rate costs that are adding to the cost structures that are going into U.S. wholesale pricing. but it's also supply and demand dynamics, right? So a more limited supply on some of the most wanted items here in the U.S. are driving higher costs, and that's being set into place. And the market seems to be absorbing them. Importers are able to sell into this rally. I think buyers know that higher costs are now a reality, and that they're going to have to pay and absorb some of that. And now it's what the U.S. consumer is willing to absorb, and that's what everyone's watching now. So that's the U.S. wholesale breakdown.
Thanks, Gary.
I know that we're going to go.
Can I just ask? Well, before we move on to talk about the China wholesale market with Louis, can you just tell us what you're hearing from your contacts about the impact of the Indian tariff in particular? Is that being absorbed in the market, pushed through, or a bit of both? Or because in Utrecht at the Shrimp Forum, it seemed to be really like maybe from now that's going to start being felt, and maybe in the next kind of couple of months even more. What are you hearing from your sources on the import side on that?
Yeah, so I think the common theme throughout the Global Shrimp Forum, and I think what I'm still hearing now, is that India and other Asian nations are going to be important partners, and they're going to remain so for quite some time. Capital investment into plants and other capex spending takes a really long time, right? India has built up a great partnership with the U.S. It's about 40% of U.S. imports, throughout the last 10 years. It's a very large share, and they have capabilities and expertise that others don't. Not only in the terms of product forms, but manufacturing, supply chain management, and that can't be replicated overnight. It's like steering a very large cruise ship and trying to change direction, right? So while these tariffs are impactful, the whole supply chain and Indian producers as well as U.S. importers are trying to absorb as much as they can, but they're going to have to work together. And I think that's the overarching theme, that they're still going to be important partners. We're still going to have to source product from India. And now it's how do we work together to try to mitigate some of these costs and not pass along as much as the tariff rates. And hopefully, a larger deal is struck. I think everyone seems to think that in the longer term, that something will be amended. I think everyone believes that tariffs are here to stay in some form or fashion and at some rate, but they're just hoping it's not as high as the initial one that's expected.
Okay, yeah, thanks, Gary. That was great. So now we're going to turn to the wholesale market in China, where we also have pricing, which is the largest volume shrimp market in the world, the US being the highest in value, or maybe Europe actually. I'm not sure how it is between the two. And then we'll look at prices for Ecuador shrimp in that wholesale market, and then we'll also look at prices, CFR offer prices from Ecuador to China, which usually takes around 10 weeks to be delivered. So we've got the wholesale pricing in the market, and then the pricing from the offers from Ecuador, which kind of indicate where the market is going. So I'll throw this over to Louis, who's our expert on this, to take us through the situation in with those pricing sets.
Okay, so thanks, Tom. I'm going to go through the wholesale prices for semi-IQF, brine IQF, and brine IQF in 12 kilogram packs in China, because although many of the viewers won't be necessarily dealing directly with China, China is a huge market. And as the saying goes, when China sneezes, the world catches a cold. If the prices in China are rising rapidly, that is going to have ripple effects in the rest of the market. That being said, there hasn't been a lot of movement in prices in China in the past few months. So if we were to drill down into pricing here, we can see weekly prices for wholesale shrimp in China have pretty much stayed flat for the whole of this summer. Now, I'm going to quickly go over to the CFR pricing as well. So this is a price that importers in China are paying to packers in Ecuador. CFR meaning cost and freight China. So that is the delivery price to ports in China. So, we saw that wholesale prices in China were pretty flat. CFR prices, a bit more movement in recent weeks and months. But again, if you look at where prices are now, kind of pretty much stable with where they were at the beginning of the summer. So there's been a bit of an up and down, but generally pretty stable. Now, this makes you think, well, not much is going on in the Chinese market, but actually this masks a kind of hidden tension between packers in Ecuador and the buyers in China. The reason is that in Ecuador, packers have been thinking throughout the summer that prices were set to rise. But yet market sources in China were saying this isn't going to happen because for a couple of reasons. Demand in China has been pretty sluggish, and this has been a common theme, since COVID, really, since the end of COVID, where demand has been, we've not seen the boom years of the pre-COVID era. So rather, demand has been pretty kind of flat, and even though summer is typically a peak in consumption, people going out, eating in restaurants, this hasn't translated into increasing prices. And this has been a kind of obviously a challenge for Ecuadorian packers because China is their biggest market. And while demand has been pretty flat in China, raw material prices in Ecuador have been increasing. So this is problematic when your prices in your main market aren't going up, but your raw material prices are increasing. And we can show that if I go and compare the Ecuador, if I can spell correctly, Ecuador farm gate price. So here we have 40.50. And I'm bringing up the 40.50 Ecuador farm gate price. So if we then draw this back here, we can see that around the end of spring, summer, and this is of course in the southern hemisphere for Ecuador, the beginning of winter, prices were kind of, that's a pretty healthy margin with what you're selling into China. But then the raw material price starts to increase. So then suddenly this margin has shrunk, and yet at the same time the price you're getting in China is staying the same. So, and this is because in winter in Ecuador, supply tends to contract. The farms aren't quite as productive, output is lower, so factories are having to compete for raw material, and there's been a big increase in factory capacity in Ecuador. So they've been trying to keep their factories running and buying up raw material when they can get it, and this has caused prices to rise. I mean, this is not a huge price increase, but it's measurable. And so when you're on thin margins, that has an impact. And so Ecuadorian packers were like, okay, well, we're paying more. We're going to expect more from our Chinese customers. And this hasn't happened. So this has been a bit of a kind of point of tension. So it's okay, you look at the Chinese market, it's stable, but if you look deeper down and further upstream, and what this means to packers in Ecuador, well, this means that they are perhaps not as happy about it. So, yeah, and I'm going to then lastly go on to the Chinese farm gate prices. So this has really been the trend in the import market in China, the dynamics behind it. But then if we go to farm gate prices for shrimp in China, we see, well, a slightly different trend. Prices are always a lot more volatile. That's because of just the nature of live shrimp sales in China, because for those who've been covering the industry for a long time, you'll know that China generally, they consume shrimp live when it's available, and Chinese shrimp producers will sell their product live if they can, because they get higher prices for it. So that tends to mean when you have a fresh product that prices are more volatile. And in recent weeks, I think the most interesting thing has been the increase in prices in China for shrimp. You see across the whole range of sizes we have available. We see that in Guangdong province, which is the largest shrimp producing province in China, prices are on the up the past few weeks, and this is directly related to the upcoming National Golden Week holiday, which has actually started now because it's also, I think, National Day in China yesterday or today, the 1st or 2nd of October. And that means the whole of China is out celebrating, enjoying meals together with family and friends at restaurants, and that tends to lead to increased consumption of shrimp. And so you see here, of course, live shrimp prices on the up in China. So
that hasn't really driven the Ecuadorian pricing.
No, it hasn't. So yeah, I think again there was an expectation that it would, but it hasn't. And it's a bit of a mystery, really. I mean, it's often comes down to speculation, in these sorts of situations in the market, even among buyers and sellers, like what's going to happen and what they are feeling from their own connections in the market, wholesalers, suppliers. The anticipation was that prices for imported shrimp were going to increase, but they haven't. But clearly they have for farm gate shrimp. So yeah, perhaps that's just a preference during these holiday periods for
the live shrimp,
live stuff, which is a bit of a premium.
Louis, is it masking a greater supply, domestic supply from China? Do you think is that something that you hear from your contacts there?
That's an interesting question. I think if you look at, if we look on a year-on-year view, the prices for this year for farm gate shrimp in China, yeah, I mean, if we can see here, the yellow line being this year's price trend, farm gate prices have been lower, and that would indicate that supply has been greater, and that is what we hear a lot from sources in China, because there's been this big rollout of these greenhouse shrimp farms, which are more productive, more intensive, and that has then in turn led to greater supply on the domestic market, and that even puts domestic supply in competition with imports, which in terms of pricing, which is kind of unheard of. But I mean, if you were to look at, say, Ecuadorian Vaname shrimp,
maybe compare 60 count to 60 count.
I think I need to on year view. That's why. Sorry, we need to go to contiguous to compare. Okay. Hang on, wait, let's do this way. Oh, sorry, this is a technical glitch, I'm afraid, guys.
Close it down and reopen it up.
Yeah, that's probably what we need to do. Here we go. Let's just reload.
We'll do it using the front page.
Yeah, let's just move that there. Let's get the CFR China. We've got 80 count. Let's get something equivalent. Well, we've got 60 to 70. That's relatively close in terms of size. Here, so let's zoom in here. You see, there you go. I mean, you'd expect, we put this into dollars, so it's easier to make a comparison. You'd expect that imported prices would be lower than farm gate prices, but we see here actually imported prices were higher than farm gate prices in China. So that means live farm gate prices were more competitive than imports. And when the premium product costs less than the imported product, that causes competition. That's competition for imports, definitely. So that's been something that's been quite new in the past year or two, and that's directly resulting from the greater production from these greenhouses in China.
And a pressure to sell, I guess, to some extent, I suppose, because it's a live product they're selling, and they've got to harvest and sell, I guess. I mean,
yeah, that's absolutely correct. Because it's live and it's seasonal, that means you do get peaks in supply, and so in the summer months, supply is greater than in winter months. So you can expect that come Chinese New Year, prices for farm gate shrimp will be much higher than prices for imports.
Okay, well, yeah, great. Thanks, Louis. So we're going to throw this over to Dan now, who's only been back from India for a few days, got back on Monday, I think. So he's got a very fresh perspective on what's happening there from the time at the show. So Dan, yeah, maybe you can take us through the farm gate pricing situation in India, which you picked up from the show, and then let us know what the mood at the show was like from the big exporting companies that were there.
So, yes, I was in India last week for the India International Seafood Show in Delhi. It's the third time I've been to the show and third time I've attended it. And I have to say, probably one of the lower attendance rates of the two that I've been to, although given that Delhi is hundreds of miles from the coast, that probably had more to do with it than the current market situation. Anyway, if you want to see the current market situation, you can come to Undercurrent for our shrimp tracker that we launched just 3 weeks ago at the Global Shrimp Forum. And you can see here that we have like a wide array of prices across different sizes and different sources of origins that you can compare very easily looking across the board at each of them. And we have here the latest prices for week 40, which I believe is the current week ending October the 5th. And if you click on any of these sizes, of course, you will find more information on that comparison compared to both previous years and other countries. So if you click here, for instance, on India, just to take a look at the current price situation here for 60 count, you'll be able to see that whilst normally India is always a bit of a roller coaster, this year especially, it's been driven by tariffs. So as Gary mentioned earlier, you can see here week 15, the dreaded week of the April the 2nd Liberation Day tariffs. The price plummeted from $3.80 per kilo down to $3.37, according to our price index here provided for us by AquaConnect. And likewise, in week 31, which I believe was when the 25% tariff was announced at the start of August, the price once again fell right back down to those levels. So you can see the very immediate impact that the tariff announcements have had on Indian farm gate prices, which for the record are also available in rupees on our site. But what's also interesting, of course, is that in between that, and indeed right now, prices are continuing to edge up. Now, the message that I heard from the show floor in Delhi is that right now, of course, it's the off-season. And these off-seasons are becoming more pronounced in India because during the summer months, the disease rates are higher, survival rates are lower. So farmers are basically learning to avoid producing Vaname during the months of, say, July to August. And then to begin stocking in earnest for the second crop of the year that normally runs through October and November. The second crop is usually about half the size of the first crop, so it will provide some, I suppose, supply relief to the market, but it will not be as significant as the crop that arrives usually from April to May at the start of the year. Indeed, during August, they were producing black tiger shrimp, which I believe has been a very successful product for them in the past couple of years. And it's provided, again, some relief to farmers who are struggling with these low mortality rates with the exotic Vaname that suffers from diseases that black tiger, being an indigenous species, does not. You can also see, if we look down here, first of all, year-on-year comparison to the price in any previous year. But what's more interesting, perhaps, is if we show variations here, you can see how India's prices across different sizes compares to where they were at the same stage last year. And what's striking about this is that, of course, India is very dependent on the US market. They sell about 40% of their shrimp each year. That's finished products to the US. Now, if we consider, even raw head-on, shell-on products before it's processed, basically that's about 50% of all Indian shrimp. So 1 in 2 Indian shrimp ends up in the US. But the market they've really got hold of in the US is the mid-sized, peeled, deveined market, covering maybe the size ranges of 40 to 70 count. And you can see here, these prices have not actually fallen that much year on year, or as much as you would perhaps be expecting, given that they are facing this 50% tariff. So, for instance, look here, 50 count shrimp is only down about 6 to 7% here, and the same for 60 count, 70 count. Where India is struggling is on the higher sizes, the larger sizes, where of course they're in direct competition with Ecuador, that produces these large raw commodity shrimp that the Americans love. And likewise down here at the smaller sizes, where they're in direct competition with Vietnam and with Indonesia and Thailand as well, and especially on value-added product formats for the East Asian market. So for the time being, the US does not really have a recourse to India in the same way that India does not really have an alternative to the US when it comes to these mid-ranged sizes. And this was one of the main messages from the show, is that at least in the short term, buyers are still buying, contracts are still there to be fulfilled, even though importers have been asking Indian exporters, can they please slow down or find any way to slow down the process, in the hope that there will be a change in the tariff situation, and so they won't have to pay that 50% rate. And what I heard was that if you are an Indian processor and you've got an integrated value chain, realistically, you can hold the product for about 30 days on your end maximum. Because at the end of the day, this is a perishable good. They can't keep it there forever, even if they do add delays at different points of the supply chain in order to try and slow down and hope for a change in circumstances. And now, given that the 50% tariff came into effect, I think it was August the 26th, that 30 days mark has already passed. So we are already starting to see now shrimp arriving from India to the US under this 50% rate, especially with US buyers who are dependent on India for those mid-level sizes for that peeled deveined product that nobody else does in the same kind of quantities that India can offer. Now, what of course was striking as well is that if you are an Indian exporter looking for other markets, and indeed they all are, then Europe, of course, seems to be one of the big opportunities available. And indeed, there's talk already of a free trade agreement, which they hope will be settled before the end of the year. And likewise, I was told that the antibiotic list, that a lot of there's been a lot of drama around, because the EU updated its requirements for antibiotic regulations and enforcement, and they produced a new list of countries that will be allowed to export to the EU under these new regulations from September the 1st next year, and India is not on it. But I have been reliably informed by the Seafood Exporters Association that they've submitted what they believe is the necessary paperwork. The government has submitted the forms to the EU, and they're currently in a 6-week feedback process in which they should be expecting at any time now the EU to tell them if they need any additional forms, or perhaps even to ultimately approve India's permission back on that list, which they are hopeful will be sorted by the end of the year. Nevertheless, in the meantime, the exporters have effectively doubled the volumes that they are doing to Europe already this year. Now, given that wasn't a huge market for many of them, we're talking about 60-70% rates going to the US and only about single-digit figures going to the EU. It's not yet a sizable trade flow, but at the same time, suddenly they've gone from about, as I say, the 7 to 8% rate to talking 15 to 20% of their product going to Europe. So it's growing quite quickly, just in response to these tariffs. Some of them I spoke to said that they'd been planning this already. Others said that the tariffs have effectively forced their hand on this. They hadn't been planning to, but now they have no choice. And they have to go looking for these new markets. By the sounds of it, they believe that Germany, the Netherlands, and the UK are the markets in Europe that they think have the most potential for Indian exporters. They're the ones that have a similar product, whereas France and Spain are already very dependent on South America and Latin America, as well as they have the input of Argentine red shrimp. The bottom line, I think, at the end of all of this is that they can live, they feel, with a 25% tariff, given that it's not hugely different from the rates being charged on Vietnam and on Indonesia, and indeed on Ecuador. And they believe that you can, given their tight hold over that mid-level range, they believe that you can find ways. Yes, they're at a slight disadvantage, but it's not, it's not the end of the world for them if they do end up with this 25% rate. But with a 50% rate, there's not an awful lot they can do with that. So the message was they really, really hope that there is some change of heart, either from Trump or some success and breakthrough in negotiations that will see the rate lowered back to that original 25% rate and this extra additional 25% penalty to be struck off. They believe if by December that has not happened, then after Christmas, they expect that US buyers will likely start strategizing and trying to find alternative sources of product, because again, nobody wants to pay this extra 50% rate.
So yeah, thanks everyone. Hope you found this information useful, and some people made it to the end of the video. Just at the end, do a quick run through of the shrimp page. So we've got the farm gate overview page, comparison of all the different countries. You can then click into the farm gate country page. You can look at China, Ecuador, India, Vietnam, Indonesia, Thailand. Clicking on the top, prices are represented in local currency with a price spread. We've then got CFR China pricing, which Louis talked about. We've got the China wholesale pricing, and then the US wholesale pricing. So a whole range of pricing data for you there. If you found this information interesting, which we hope you did, you can sign up for a pro trial to UCN using the link which is in the post where this video is contained. So yeah, thanks Gary, thanks Louis, thanks Dan. Thanks for listening, and thanks for your contributions, and everybody have a great weekend. Take care. Bye.